That's why you hear some people saying, if I take buy, it goes to sell. If I take sell, it goes to buy. You understand? This is actually what is happening. Everything here is what? Market inducement. These are created by the institutions. So you need to have in-depth knowledge about the market or the chart in order for you to understand these things. And that is exactly what I'm teaching you here. Okay, market inducement refers to a strategy used in financial market, especially in forex and crypto trading, where large players like the institutional traders create a price movement or pattern to lure retail traders into making poor decisions. Okay, the goal is to induce a false sense of market direction, only to reverse the price afterwards. Okay, allowing the big players to profit at the expense of retail traders. All right. Now, how market inducement works. All right, take note of this. Fake breakout. All right, so the market can create a fake breakout for you to think. Okay, so let me read. Fake breakout. Price makes a key support. Price breaks a key support or resistance level, making traders to think a trend is starting, then quickly reverse. All right, so price will break a key support or resistance level, making traders to think that, if a key support or resistance zone is broken, what do you see? You see market structure shift. Okay, market structure shift. All right, this will make you think that the price is about to reverse direction. All right, so the moment you think this breakout, all right, is going to cause the market to change direction, you are dead. So I repeat the reading. Fake breakout. Okay, price breaks a key support or resistance level, making traders to think a trend is starting, then quickly reverse. Okay, so today you are going to know why sometimes market structure shift, okay, does not necessarily mean that the price is staying in direction. Okay, sometimes market structure shift actually is created by the institutions, all right, to make you take poor. The first one says that a fake breakout, okay, can actually be created by the institutions, making you make poor decision or take poor decision. Okay, now the next thing that happens is what? Stop hands. Price pushes past a popular stop loss zone to trigger retail traders stops. Okay, creating liquidity for institutional trader entry. I repeat, price pushes past a popular stop loss zone. Okay, price will push past a popular stop loss zone. Okay, triggering retail traders stop. Okay, to trigger retail traders stop, meaning to hit your stop losses. Okay, creating liquidity meaning creating money. Right, remember I told you liquidity is money. Creating money for what? Institutional what? Entry. All right, the next thing that happens is what? Trap moves. All right, the market creates a move that entices traders to enter. The market creates a move that entices, take note of this, entices traders to enter. It means it creates some price actions, okay, or some form of confirmation, candlestick patterns, all right, to make retail traders think at this point, right, market is actually going to what? Go in their direction or in their favor. All right, and look at what happened after they have created that price movement. Okay, look at what happened here, only to what? To reverse aggressively. Okay, what happened is that afterwards the market reversed aggressively, and then you will be sitting there thinking, how? I saw everything was on point, but I end up what? Hitting my stop loss. So yesterday we talked about liquidity. Okay, liquidity, sweep. We made mention of 3 features that you need to see on what? Liquidity, sweep. All right, 3 features. Okay, first one is what? Accumulation. Thank you. Okay, accumulation. All right. The second one, we go manipulation. Good. Manipulation and distribution, right? Distribution. Very good. These are the three main things that you will see during manipulation. Okay? Three main things that you see during manipulation, and we are going to apply all. Okay? So let's do an example here. Now, assuming that the market is accumulating in a channel, all right? Market is accumulating in a channel. Okay? You have this here, creating equal highs and equal lows. Equal highs and equal lows. All right? Okay? So now, market is building momentum in this channel. All right? The market in accumulation stage or ranging stage, the market is building momentum on this channel, okay, to push or to manipulate. All right? So at the top here, okay, understand that at the top, we have liquidity. All right? I told you, wherever the market touches 2 or more, it's a liquidity. Okay? Even once, it's a liquidity. Okay? Creating liquidity above and below. Okay? Creating liquidity above and below. Now, the market is accumulating. This is accumulating stage. Let me make it. Now, we have the accumulating stage. As a trader, a professional trader, your one major strength is to anticipate. Okay? Anticipate. All right? Anticipation. I believe everybody understand anticipation. Okay? Your major tool is to anticipate the market. Okay? Be able to predict what the market is doing or is about to do before it even does it. Okay? So now, if the market is accumulating, all right, or ranging, now you need to actually anticipate where the breakout manipulation is going to happen. Okay? You need to anticipate where the manipulation is going to happen. All right? So anticipation, if you're anticipating, you need to what? Check the environment. Okay? Check the environment. What is actually happening at the environment? All right? Or check the past data. What actually happened? We have accumulation stage. We are left with what? Manipulation and distribution. As a trader, where you have to benefit from is the distribution. But you should be able to actually anticipate where manipulation is going to happen from. All right? You should be able to anticipate where the manipulation is going to happen from. Right? So sometimes the market will what? Manipulate from above, manipulate from below before begin to push. You should be able to know. You have to anticipate or look at the environment. Okay? Look at the environment. Check the environment. We said market have to be balanced at every moment. Once the market is not balanced, it means that it's abnormality is happening. Okay? The moment you see fair value gap around any accumulation, you have to take note of it, because that zone is not what? Balanced, and the price needs to balance it. Okay? The price needs to balance it. All right, so we might have something like this. Let's say price is in the downtrend. Okay, price is in the downtrend. All right, now price got here, begin to create equal highs and equal lows, building momentum here, creating liquidity above and below. All right, some way somehow price find a way to what? Push up, creating market structure shift here. Creating market structure shift here. whenever market structure shift happen, what do you think? Well, what comes when market structure happen here? Market structure shift happens here, okay? Because market is in the downtrend, all right. And here market accumulated, all right, and break out from the accumulation, breaking the previous what lower high. Okay, breaking the previous lower high, giving you market structure shift. Okay, so what comes in mind? Change in direction. All right, so when there's market structure shift, what do you do as a beginner trader? What comes in your mind is to wait for the price to come back to retest it. Okay, create your candlestick pattern around the retest zone, and then you what you enter for buy because you have seen market structure shift. Most cases this market structure shift is not a valid market structure shift. It is intentionally created by the institutions to deceive you into making poor decisions. All right. So what will happen, or how will you know that this is a fake break of market structure shift? How will you know? Is to check this environment, this area. Okay, check this area. Check this area if there is no imbalance. Okay, if if there's no imbalance, okay, if there's imbalance there, it means that this market structure shift is just to manipulate you or to deceive you into making poor decision. Okay, because the market is coming up here to fill the imbalance. So I told you from the beginning, everything we've learned, you have to put it into practice. Okay, so now we have 3 candlesticks. Okay, when you have imbalance, you have 3 candlesticks, right? Okay, we have 3 candlesticks. You have 3 candlesticks here. Now the market has created an imbalance right here. Okay, and the price is in the bearish direction. It got here, begin to accumulate. All right. Instead of it to break from below, it broke from above and created market structure shift from this level. Okay, market structure shift from this level, making you think that the price is about to push up. And at the end of the day, since we have this imbalance here, the price will actually give you what you want to see. All right. At the retest zone, the price will give you what you want to see. So it can give you what? Bullish engulfing, a very nice one. Okay, all this is market inducement, is to lure you into the market, all right, to make poor decision. All right, so now you have what? Your market structure shift here, you have your candlestick confirmation here. What do? You enter for buy at this level, possibly place your stop loss behind this level. Okay, your entry is going to be here. All right, but this wasn't what? Actual good what? Place to enter. Why? Because this is what? Market inducement. All this thing here is market inducement. The price just broke this this zone, all right, gave you market structure shift here. Okay, market structure shift here to fill this imbalance. Okay, to cause the market to be balanced, and then what? Push down. Sorry. Okay, and then push. So at this stage, okay, this stage is manipulation. All right, this stage, this right here, let me use this level. This right here is manipulation. Okay, the whole of this zone is manipulation. Manipulation. Okay, the whole of this zone is manipulation. You need to understand it. Okay, so if you as a trader you are able to anticipate what is about to happen and you notice that this is manipulation, then you are going to benefit from what? Here, the distribution stage. Okay, you are going to benefit from the distribution stage, which is this level. Okay, so you are going to make entry from here. All right, so this from here to this level is called distribution. So see, the whole of this thing here is market inducement. Okay, what do we understand by market inducement? Like I explained, I said market inducement are price actions, okay, or candlestick pattern created by the institutional traders to lure retail traders or to deceive retail traders into making poor decisions. Okay, so the whole of this here is what do you call it? Inducement. Okay, you can see market inducement on several occasions. Okay, it's not the same. It's not going to be only this. All right, every price action, all right, that you can ever think of, okay, market can be induced on that price action, or it can be a market inducement. So I repeat this, then we proceed. We look at another example. Now we have price giving us what? Lower highs and lower lows, lower highs and lower lows, indicating what? Bearish direction. Okay, and in the bearish direction, it got here, begin to what? Accumulate. Okay, begin to accumulate, and then it break out from the accumulation zone. Okay, creating what? Market structure shift. Under no circumstance in a bearish direction should this previous lower high should this previous lower high be broken. Okay, so once it is broken, it gives you what? Market structure shift, telling you that the market is about to change direction to what? To the upside. Okay, or bullish. All right, and I'm saying that some of the market structure shift or the price action that you see are market inducement. They are not real. They are created by the institutions. Okay, so before you consider this as what? A valid market structure shift, first what? Examine the environment. Check what is going on in the environment. All right, if you find out that there is an imbalance around this level, this zone, you have to what? You don't have to consider this as valid in most cases, because in most cases it can be what? Market inducement, because the direction is bearish. All right, got here, manipulate. So the moment you see what accumulate, rather, the moment you see accumulation, be thinking of what? Manipulation and what? Distribution. Now the price might also what? Break from below. Okay, it is in down direction. Okay, like I said, check the both side. All right, to see what is actually going on. Sometimes you might see imbalance here and imbalance at the bottom as well. Okay, so for example, you might see that the previous chart. Okay, at the previous chart you might see some imbalance here. Okay, all right, sometimes the market might what? Break from below, take liquidity above, come up, take liquidity below, then begin to push down to the normal direction. It also happens. Okay, how do you know that? How do you know? Now you need to check the environment, anticipate what the market can do. All right, we have the market what? Consolidating. The trend is what? Downward trend. Consolidating, creating liquidity below and above. Okay, market will have to take the liquidity out. All right, and you need to also check the environment as well, if in case there's imbalance around any. So now market is in the downward direction, creating higher lows and lower lows. At a point got here and began to what? To accumulate, creating equal highs. Okay, equal highs. So now if the market breaks this ranging zone, okay, this channel, it's going to give you break of structure from this level. Okay, BOS. When you see BOS, what does it mean? If you see BOS, break of structure, it means that the market is declaring direction. Okay, market is declaring its intention of direction. So this is declaring that the markets want to go what? Down. All right. But sometimes this happens. Okay, sometimes this is created by institutions. They can intentionally create this break of structure for you to think that the market is going to go what? Continue what? The direction. Okay, or to make continuation what? To the downside. All right. But here we have this imbalance here. Okay, market is not balanced here. All right, and we have this imbalance also at the top. And you know that the market should what? Be balanced. Well, imbalance means that here only the what? If this is sell, it means that here only the sellers participated, or only the suppliers what? Participated in this zone. Okay, so for the market to be balanced, the buyers needs to come here to balance it. Okay, they need to also what? Come and participate in the zone. Hope you are getting. All right, they need to come to participate in the zone. All right, so for the price to move down, it will be very hard. Why? Because this here is not balanced, and this is acting as a magnet. Remember, we said that imbalance acts as a magnet. It is acting as a magnet. So whatever the price is at this level, okay, this is acting as a magnet and pulling what? This price from here. Okay, so sometimes you might see market ranging in this zone. This zone accumulates. Okay, come down here, fill this imbalance. Okay, fill this imbalance, then come to this level. All right, now look at the trick here. Here we have market break of structure. Okay, after this break of structure, we have this zone as what? Our resistance zone, because previously it was a support and now it has turned into a resistance. Okay, so the price will get here and begin to give you multiple rejections. Okay, it might give you dodges here for you to think, at this point the support here is very hot, the resistance here is very strong, so it's going to push down, not knowing that those reactions are all what? Manipulation. Okay, they are all market inducement. Okay, it can give you even bearish engulfing at this level. But as an advanced trader, you need to actually understand what is actually happening. Okay, so from here, it will fill this imbalance, balance the lower side. Okay, now come here, give you something like this, bounce back, and what? Begin to push up. Come here, push up to fill this imbalance left behind. All right, to balance the market in order for the price to have free movement to the downside. Because in a trade, we are dealing with two parties. Okay, both parties have to participate at the same time. All right, at any point in time whereby you have only one party which is participating, it is termed as what? Imbalance, or I put it what? How do I say it? I have another word. Abnormal. Okay, because the market has to be balanced. Right, so now market will fill this zone, break structure, making you think that the price is pushing down to the downside. Okay, come here, create your candlestick pattern that you want to see, okay, at your key area. All right, making you think that, okay, this is the right time to enter. Right, not knowing that this move right here was actually created by what? The institutional traders. All right, this is actually called what? Market inducement. Right, so at the end of the day, you make entry from here, set your SL above this resistance level. Okay, the price will actually make some move to the downside. Okay, and push up. Okay, the price is not just pushing up. Okay, it is pushing up to fill this what? Imbalance. Okay, and in the process of pushing up to fill this imbalance, you will see what? Market structure shift around this level. Okay, breaking this previous what? Lower high. All right, giving you higher high. Okay, then you will see, after seeing this market structure shift right here, you see, oh, the price is about to go up. All right, price is about to go up. So let me look for what? Entry for buy. Okay, so the market will create this higher low, bounce back, pull back to what? This resistance level. Okay, this resistance will turn into what? A support around this level. Okay, price will push to this level, come here, create the price action or the candlestick pattern that you want to see in order for you to take for as buy. Okay, like this, like bullish engulfing. All right, then after seeing this, remember you have been stopped here. Okay, you first of all, you have been stopped here. After seeing this, you change the decision. You said the market is going up. You take entry from here, put stop loss around this support, below this support level. The market push a little bit up, fill the imbalance, and begin to what? Push down to the downside. Then you will be stopped at this side as well. So now you have been stopped here, you have been stopped here. So here is called what? Accumulation. All right, from here to here is called manipulation. Okay, manipulation. All right, it's called manipulation. From this zone to this zone is called distribution. Okay, distribution. So as a trader, if the market is pushing down, you have to be quiet. That's why you hear most of the profitable traders say that waiting is 80% and strategy is 20%. This is the reason. Okay, a profitable trader will see the market break out to this level, but will be observing. But a beginner trader will hop into the market, right? Become liquidity for the institutional traders. Okay, market will come down, push up, but a profitable trader will be sitting on the chart, watching it. All right, then he wait till the price get to what? The distribution stage. Then he benefit from this level. Let's do one more example. Okay, let's do one more example. I told you can see market inducement in every price action that you can ever think of. Okay, so let's use double top for instance. Okay, let's say the price is pushing up, all right, creating higher highs and higher lows. Okay, at a point gives you what? Equal high, then breaks the previous higher low. Okay, so we have our higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher low. Sorry. Higher low. Now here the market gives us equal. We have double top. Okay, market has created equal highs and has broken the neckline. Okay, we know that or we understand that in bullish trend, the market will be creating what? Higher highs and higher lows. All right, higher highs and higher lows. Under no circumstance in bullish trend should the price break what? The previous higher low. Okay, when the price breaks it and gives you lower low here, it means that the price has created what? Market structure shift, isn't it? Market structure shift. And market structure shift means that change of direction, all right? Change in direction of direction. Okay? All right. So once this is created, as a beginner trader, all right, what he will be thinking of is what? Is to wait for the price at this level, the neckline level. Okay? At the neckline level, look for entry, right? Wait for the price to create market bearish candlestick patterns here, right? Possible rejections or bearish engulfing around the zone. Okay? That's what a beginner trader will be thinking, right? But as an advanced trader, you don't have to be thinking only from this side. Okay, you have to be anticipating around this. Okay, checking what is actually happening in the environment or what has actually happened in the past. Okay, now most or some of the price actions, okay, are being created by the institutional traders. This can be market inducement. All right, so guys, a beginner trader will think of maybe entry from here, the retest zone at the neckline. Okay, and the price, the market will actually give you what you want to see. Okay, it will actually give you what you want to see. It might give you the bearish engulfing you need here. Okay, the bearish engulfing you need here, making you think that the price is about to push down. So what do? You sell, right, from this level. But an experienced trader will not be thinking of only here, but will be checking or anticipating what is going to happen, the possible outcome. All right. Sometimes the market might create imbalance around the top. Okay, it might create imbalance around the top. All right, so you have to anticipate the top as well. Okay, so if there's imbalance around the top, this right here might be what? Market inducement. It might be a what? A price action that has been created by the institutions to actually deceive you to make poor decision. Okay, so a beginner trader will enter from here, put the stop loss here, but here is what? Liquidity. All right, so let me wipe this out. So if the market has created anything like imbalance here at the top, okay, at the top, if there's imbalance at the top, this will actually be what? A liquidity or market inducement most of the time. Okay, so you see the market will give you what you want to see around this level. You enter from here as sell, right, or short position. Market will give you some form of move to the downside a little bit to entice you, then begin to shoot up. Okay, hit your stop loss, then fill the imbalance. Okay, balance the market and begin to push down to the downside. So this one right here, okay, is full of manipulation. Okay, this one is caused by institutions. So as a trader, you don't just have to see your candlestick pattern and enter. You have to anticipate the environment. All right, like a driver. If you're a driver, what you need to do is anticipation. Check the environment before you move. Right, the same thing. Okay, things can happen. You can see everything clear. Everything will be on point, but the trade might go against you. Why? Because of this thing that happened in the market.